Well, we'll get going here because it's Friday. What a week! I was kind of dropped some notes for what I call market conditions for the week, and they're in no particular order. Um, if you're interested, they have that BRICS meeting in South Africa, with China and South Africa and Russia, and they're looking for new members where they're trying to uh, basically uh, come up with their own currency and their own bank and things like that. So I think I saw where they're going to invite some more members like Saudi Arabia and Qatar and some other Iran and some other countries, and so we'll just see how that goes. And um, just something that was happening didn't catch much press, I don't think. Of course, we had China on Monday. They cut key lending rates. Then you looked at the gold market, on physical gold, the premiums went to the highest level since 2016. So I don't know if people over there are buying or collecting gold or what they're doing, but it seems like they're having a little bit of a economic crisis in China at this point, especially with their property and development companies missing bond payments. So something you're going to keep an eye on, because as the second largest economy, what happens over there can affect us. We have a lot of companies that have a lot of business over there, and we get a lot of our crap from China too. So we just keep an eye on that. The big thing I think was, the 10-year bond went up and reached 4.35%. When the bond goes up, stocks go down basically, and the 10-year is the key, for your mortgages and credit cards and such. But credit cards are 20-some% now, and mortgages I think are right between 7 and 8% last time I looked. Which when I bought my house in 1999 and built it, I think I paid 7 3/4 for my house, interest rate at that time. So it's just people aren't used to it, and it's a lot higher than zero, and it does trickle through the economy, and especially with inflation, it's hard. People have to borrow money, and then the banks, of course, are having some issues, and they're tightening up their lending standards, which is another kind of a pressure on the economy. Talking about credit cards, I saw this week more Americans are, failing to make payments on credit cards and auto loans. New credit card and auto loan delinquencies now surpass pre-COVID levels. So credit cards, I think from the first quarter, delinquencies were at 6.5%, and second quarter 7.2. Car loans in the first quarter were 6.9%. Now I think they're 7.3%. So we're starting to see
that's a big number.
That is a big number. You think about it. And then if you want to research it, I just kind of briefly looked into it. A lot more people are putting necessities on credit cards, especially food, which is kind of worrisome that you're paying for food on your credit card. And, basically when people aren't paying their balances off and the high interest rates, credit cards are 20-some%, that just adds more to the problem that individuals have paying off their bills with inflation.
I think they made that so easy to put, we used to go to the grocery store and we pay for everything in cash, if you remember. Today,
I still do that.
Yeah, today it's swipe your card, and the worst thing you could do is go into a store and use your debit card, because as soon as someone gets all of the debit card numbers, they clean your account out. Yeah. So you're just better off using a credit card. But yeah, it goes back to what you're saying. People aren't paying the credit cards off. So now their food is staying on their credit card along with everything else. And it's just ballooning. The debt is ballooning now.
Yeah, it's not only personal, credit, it's government spending and business spending and
corporate debt, corporate debt. Yeah.
Yeah. And then you look at, like banks, and I was just looking at Schwab. They plan to reduce their costs by 500 million. They're going to lay off more people and, try to get rid of some of their real estate footprint. And then they sold 2.35 billion of their bonds. From what I can tell with Schwab, they're borrowing from the Federal Home Loan Bank now just to fund their operations, because they, like Silicon Valley Bank, have a book full of bonds at less than 2% that they're losing money on, and could be interesting if Schwab is the next one to have issues. I mean, the president has come out and I'm buying more stock and we're doing good and all that. And it kind of reminded me of the days when I watched the Bear Stearns president come out and say he was buying more stock and his stock was good as his stock was going to zero at the time he was talking. Um, so we'll see, and I'm not trying to be a doom and gloomer, but I just look at what I see and try to figure it out in the bigger sense of what's going on and how it affects the way I look at how I invest and kind of bring up discussion points on how you guys like to invest. And, for me, again, every week we kind of go and look at the T-bills. And, I think I looked this morning and you can get a 30-day or 45-day for 5.4% right now, and that's not bad for safe money as opposed to watching the stock market go up and down, trying to determine if Jay Powell is going to tighten or stop raising or what he's going to do, or if NVIDIA is going to, own the world or not. And we'll talk about NVIDIA in a little bit and how that worked out. But, I'm not full of confidence right now that the stock market knows what to do. It's gone up quite a bit, and watching, a lot of the financial channels. I don't watch them as much as I watch in the morning when I do my stuff. I watch MASH instead, because I get tired of them hearing them. It used to be Hogan's Heroes, then they switched it to MASH, so that's what I watch. But they're cheerleaders for their own stocks. You bring in these analysts, and all they talk about is the stocks they have because they want to push their stocks up and have people buy them, so that their portfolios do better. That's my opinion. So I don't listen to them too much at all. Another thing that happened with the banks, S&P Global this week lowered the credit ratings on 5 regional banks, and that was due to significant deposit outflows. And I've been seeing data too that even some of the bigger banks, the top banks, the Goldman Sachs and Bank of America's, and those are also seeing deposit outflows too. And as I go through, and I think I looked through 200 CDs that were available, at least on Fidelity
What do you
today.
mean? Wait. What do you mean by deposit outflows? The money they put in the account, now they're outflowing it out? Is that what you're talking about?
No, I mean, consumers like you and I are taking it out and put it
To
into
pay
T-bills or
bills,
something. What's
or
that?
to buy investments, or to pay
To,
bills?
well, it could be either, but I think it's mostly to find better yields,
Okay.
But
And
savings,
I'm looking through the the CDs, like 200 and some, just scan through them. And anytime you find a Goldman Sachs one, it's always seems like it's a quarter point under what everyone else is, offering. So I never put any money in there. In fact, I haven't put any in banks for a while because the Treasury is flooding, the market with Treasury bills and paying a higher rate at less risk and at a better tax, more tax advantage. So why not put in the Treasury bill, for 30 or 45 or 3 months? So they're competing with the bank directly. But anyway, if we see more of these downgrades, which you haven't really seen in a long time, now all of a sudden we're seeing bank downgrades. It's an interesting thought to keep in the back of your head when you're talking about liquidity. Just a little bit, go ahead.
Treasury bill being offered today right now is 5.39%.
Okay, yeah, about 5.4. Yep, there you go.
Yeah. And
I'll take that any.
Goldman Sachs is 5.5%. 5.05%.
Really?
5.05%.
See, that's why I said they're about a quarter point or more below. Yep.
Right.
Say, Mark, what do you think the real rate of inflation is?
We talked about this. We have probably most all of us lived through the 70s and 80s and that whole inflation period. I remember during the late 70s and early 80s, I was just finishing college and I was finishing an economics degree, and we had quite a bit of inflation back at that time, gas wars and things. And so I got to study it and see it at the same time, which is different than studying it, never seen it. Like a lot of kids today have never seen inflation or interest rates as where they are. And back in those days, I kind of looked at how they calculated back in those days and how they calculate it now. And then I looked into people who study this. And from what I can attest to, they changed the way that inflation is calculated now. And basically, when we were at 9% inflation in this last round, it's about double. It's about 18%. It would have been reported back in the 70s and the 80s. So if we're at 5% now, then it would have probably been calculated 10 or 11%. But the way that I calculate inflation is when Jan comes home from the grocery store and keeps saying, this is 30% more than we paid last year. And it's just two of us. And we buy the same thing every week, And I'm like, yeah, I know. I just filled up the cars and, and it's dollar something more per gallon times this many gallons. So you can pretty much figure it out yourself, what you think inflation is and what it really is to you personally. Then they have core inflation where they take out energy and food, which I don't know anyone that can't live without energy and food. I don't know why they do that other than they say it's volatile, which it is true, it is volatile, but it's still inflation. When you see what's potentially going to come up, and I think that the Fed may be seeing this, gasoline prices have gone up, food prices have gone up in the last month, at least here where I live. I can see that personally, so that hits us. And I would imagine that that's going to run through the inflation figures, when they finally come out with them in a month. So that's my 2 cents. What do you think it is?
I think it's about 20% or so.
Well, like Jan says, at least our food cost is 30% higher than it was a year ago.
Yeah, mine is kind of a back of the envelope, 20 to 24% is what I come up with.
I don't disagree with you there.
Aren't pork prices up 100% year over year, I think, right
Yep.
now? And of course, eggs are up enormous amount. So if you look at just the general stuff we use on a day-to-day basis, it's crazy. Like I filled up my car the other day and it's like $1 more than it was 2 months ago.
But you're right on your observation there. People who haven't had an 18% mortgage, which I have had, that's a little wet blanket on everybody's outlook.
Yeah.
Then you look at, labor, and you saw UPS just settled with their union, and I think they got a pretty good increase. And then the American pilots just settled, and they got a pretty good increase. And I believe that the auto workers are talking strike, and they're in negotiation. So this wage inflation, although I don't have any problem with people getting more money, but it will cause more inflation in the wages side coming up in the future too. So if you go back and look at, the 70s and 80s, when they stopped raising rates, then inflation spiked back up. I think that's what Powell's worried about. And he's looking at, potentially, more inflation on wages, on food, and on energy. And so that's why he's cautious where he is right now. It's not saying he's going to quit or go backwards. And again, for everything that I've seen and heard, when they start lowering rates, that means they broke something and something's gone wrong. And I don't think they've done that yet in their minds. That's about all I have on market conditions this week. And, other than NVIDIA, and I'm going to take a look at NVIDIA here and kind of, let me see here if I can pull this up.
So Kathy Wood dumped all her NVIDIA.
Yeah, that was interesting, wasn't it?
Right?
I think Kathy.
I'm trying to understand that.
Kathy Woods, to me, and I'm not a big Kathy Woods fan, but I don't dislike Kathy Woods. But she's not the best market timer in the world. She dumped them before they all went up too.
Yeah.
The last time, before the last quarter. Let me see here if I can.
Well, everybody's saying that NVIDIA is overpriced. It should be around $260 a share. I don't know. I'm in it. I'm playing with their money. I don't have any of my own money in it.
That's good.
I'm just leaving it as I have their money and that's it, and just letting it ride.
I put in a short the other day, so I'm actually up on it today. It looked like a foolish move the night of the of the earnings announcement, but then then yesterday it only closed 47 cents up. Here's what I was talking about, and I put it in the Discord yesterday, talking about there's going to be a lot of FOMO excitement about NVIDIA, and so utilize your limit orders. Don't buy into the hype and try to get a sale. And I'll show you what I did, and I didn't get the sale, but that's okay. But here, this is the minute chart yesterday on NVIDIA, and you can see we started right here. That was open, and then boom. Well, where was open? We were 471, somewhere in there. Went all the way up over $500. Everyone had their orders in, probably market orders and limit orders high, and everyone didn't want to miss out. And within the first couple minutes, you can see it drop right back down, and then a little more euphoria, and drop back down, and then a little more euphoria, buy the dip, went sideways, drop back down, buy the dip, drop back down, buy the dip. Then we started a slow, move upward, got back up. People are getting, oh, well, maybe I shouldn't have got out. Maybe I should stay in. Up, dip, do a little buy, dip. Well, we ended up here, 47 cents above where it closed the day before, right before earnings. That's interesting to me. And that's the FOMO going on in the market. And I was thinking about, NVIDIA, and not that it's a bad company. I mean, obviously their earnings and everything's going nuts, but we're in a position now that's strange to me. And you guys tell me, you've been around a long time investing, that one company is going to save the whole market or make the market, go up for the rest of the year. And, and I know we've done it this year with, the NASDAQ and the S&P with, magnificent 9 or 7 or whatever they are, pulling most of the market up. But one company had all this hype on it. And then you can see what happened, with NVIDIA. So what are your thoughts on that?
Anyone? I think you have to separate the two elements of the market and what the company does. Yeah, NVIDIA is dominating chips. They are the leader. They're making money. They're doing well. And then you have the market. And right now, the market is driven. I look at where it was in May, and the amount of leverage that probably is, or margin has built up over the last 3 months. And you could just see it after market on Wednesday. The thing just shot up to like $520. Well, if you're an institution and you've got this thing margined out, you're cashing out after market. And then all the retail investors are saying, hey, I got to get in this. It's going to change the world, blah, 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 blah. Not realizing, like you always say, end of the day, they come and take your money away. And it's, to me,
so true.
To me, it's like, was it Thursday? It opened up, shot up. Retail had put their orders in the night before, got their buys, and then the institutions came in and said, we're going to start shorting this now. And I really think this thing, you're going to see at least between a 30 and 60% retracement from May's earnings to the top 520 over the next probably, month or so. And that would bring it, it becomes interesting, or, $18 down from where it is today, down to $388. I mean, that if I was dollar cost averaging into this, this is where I'd be looking, is down in that below 400 range.
Here's where this is the daily chart, and this was earnings. Yeah. And, I put out a thing, if you're a swing trader and you're following my guidelines, you get out. Of course, the next day, it started right up here, but we ended right back where we pretty much were.
Yeah.
And so here we are, 47 cents above. And then here we are today. Today, we're bouncing right off the 9. I look down here, we're starting to slope over a tad bit on the MACD, and we've already crossed the stochastic, which to me is just a predecessor of where the MACD is going. And then the RSI has gone from 60 down to almost 52. So we'll see how it goes. But on earnings day, I just put in a small short. Of course, this day looked horrible until it until it closed, and then today looks pretty good. But it's not
Yeah.
something I'm going to play around with Nvidia, because Nvidia to me is like it's like Tesla. It's a religion now among a lot of the investors, and so fundamentals and technicals don't matter to people who get into Nvidia and Tesla. Not that that's a bad thing. That's just reality, and from my point of view. But when I see the euphoria, I'll take a little bit of a shot and see what I can do. And I'll probably be out of it today. I haven't decided yet, but I'll be up, a little bit. What are we
So
down
if you
today? We're
so
down
if you're
4%.
so if you're a long-term player with NVIDIA, does any of this small, and you're looking for it to get up to 600 before you're out, does any of this stuff really matter?
Well, no, it does not. I mean,
Okay, thank you.
if you truly,
It
if you
scares
truly
me when I
believe,
hear you guys talk like this.
no, yeah, and you got to remember, we're talking about swing trading here,
Okay,
and if and that's Kerry had a video and he did the right thing. He said, I believe it's going to 600, so why would I pop out? And then I agree with that. If I believed it was going to 600, that'd be fine. But as I'm looking at it, just as a swing trader, and that's what we're talking about, I don't see um, I don't see it going to 600 right now. I don't, because we've got resistance lines here, we got resistance lines here. We've had a nice run up, had a big run up. This was the AI run up, and now we're in a sideways pattern. We popped up a little bit, but we just can't get past this resistance here. But if we can, maybe we can run up. It all goes back to basically, your opportunity cost. Uh, so if you're in Nvidia, which is fine, or in anything, an index fund, and well, let me go back to a year chart. And you got in, at this point here, or this point here, and you believe it's going to 600, you're fine. But if you got in right here, you're down at this point, you're still down at this point. This is basically your opportunity cost of your money. Your money's not really making you anything at this point. If you think it's going to stay down a long time, this opportunity costs you more money over time. It's like putting it in a savings account where you have to pay them interest because you're not getting anything out of it. And in fact, the value of your money has gone down. So that's the way I kind of think of it in a short-term thought process. And I've gone through the big, 87s, the 2000s, the financial crises, where it takes, it could take years to get back to even, and that's your opportunity cost. So there's nothing wrong with long-term investing, none of it at all. But when you get to a point where I'm at, I want to make sure that I reserve and save my money, and I make money and I don't lose it. So that's why I use charts and these tactics to help me decide when to get in and when to get out. But right now, I'm just going to tell, full disclosure, the majority of what I'm in right now is treasury bills just waiting, because after watching these markets for years, and not just treasury bills, but I do the swing trading so I can get in and out. And you can see this hasn't been a good month for swing trading because the markets have been going down. And unless you're shorting the market, which I don't show in the swing trading course, because you can really get in trouble shorting, and I'd rather not be responsible for people really losing money because they shorted. But I'll be patient and I'll sit out and wait. There are other ways to look at it, and we're going to come up with a chart, and Drew and I are working on it to go over Kerry's bus 13 and 12s on an investment scale, which is a longer term. It won't be using the 200-day moving average, because if you're up here, and the 200 is good for me on S&Ps and indexes, but when you're on an individual stock, these things can pop up and down pretty quickly, like over here where we gapped up, or that could gap down. So if you're in up here, let's say we're at 480, and you wait to get out at the 200, which is 280, you're down $200 before you get out, times the number of shares you have. So we're coming up with a different way of doing it where it's more timely. You won't be swing trading basically, but you'll be able to, if you want to get out and say, look, the charts are telling us it's going down for a little bit and then it comes back up and get back in, you have that opportunity too. So hope I answered your question. That was kind of a long way around that.
Well, it's good. I have an understanding of what you're saying because I've been hanging around long enough. But it kind of like with Tesla, I've made two fortunes, small fortunes with it, going up and going down, going up and going down, and now I'm slowly going up again. But I didn't want that to happen with NVIDIA. I'm up on it now, but I can see it's going back down again presently. So, but with the swing trading stuff, I think there's a lesson to be learned that I might be able to. And with the video that Kerry made recently, how to protect your losses. I don't know if you guys remember that video. Okay, that's the one I'm kind of talking about, protecting your losses over the long term, getting out at the right time. The only question I had about that is when you buy back in, it brings up your average cost, and if that hurts you in the long term, as opposed to just leaving it there, if that helps you or hurts you in any way.
Yeah, let's look at Tesla here. This is a year chart. And you had a nice run on Tesla. And as a swing trader, you would have got in. Well, you could have got in if you were under the 200 and you like to trade. And we have it under the 200 list, which is highly risky. But let's just say you waited and you followed the rules. You got in right about here. And that's at 203. And you followed it all the way up. And then you probably got out here. Okay. And that's at 256. So you're up $53. You missed out on this loss here. And it got you back in up here, right about here. Okay, that's 261. Okay, you didn't know if this was going to fall more or not. So it got you back in, and then all of a sudden you popped up, and you would have got out before earnings at 293. So there was another $30-some, and you would have been out, missing all this downtrodden here until you got back in right about in here at 233 in this area. So it's about missing this part right here,
right,
and catching this part right here. So is this going to go up? I don't know. We got almost across of the MACD. It's not there yet. We got a nice crossover of the stochastic. We still have an RSI that's kind of, low. So I don't like the 9 going down that way. I want to see the 9 going up this way. I don't like the 20 going down, the short-term guys. We're seeing a rollover of the 50, okay? And, we'll just see how this plays out. Would I be in this, swinging back in at this point? No. But so. You're right. If you're a long-term person and you don't have the time or the desire, because you have to have both to kind of do this. I mean, again, if you would have gotten in back here, okay, this is September of 22, so about a year ago at 373, and you stayed in for a year, you're at 235 now. So that
big hole.
That's called lost opportunity cost over a year. Yeah. So the way I look at it, and this is just me, I would have gotten out at that point. I would have missed most all of this, got back in here, gained some of it back, got out, stayed out, got back in here and gain that back. This in here, this period here, let's just say we're in the period now. I might have just stuck that money in a 30-day treasury making 5%, let's say back at that time, and being happy and just waiting until I get to this point and then pull it out and do the same thing. So that's really swing trading is about getting out on and missing the downs, not just letting your money sit, but putting it somewhere where it works. Now it's perfect because we have a better, market for fixed income than we had for the last, 15 years. So there is a place to put it. So you're not making as much money, but it's safe money. And then when you get back in, you're making money. So you're missing this part, you're gaining this part. missing this part, gaining this part, missing this part. That's how I see it. But you do need time to do it. You do need to educate yourself on it. You're not going to hit the highs and the lows. That's not what we're about. We're about bunts and singles and doubles. Well, we're not doing 10x, 8x, 100x on this. It's just methodically trying to utilize the same information that the big guys use on a much bigger scale to help us improve the probability of success in our accounts. But again, it really is up to you and how you want to do it. You know, I can sit here in the morning and do it, and I can come back at night and do it, and I look at it normally at noontime, and that's the extent of how much I really want to put into to looking at these charts.
Well, I
I think-
appreciate it, Mark. I have nothing but time.
Okay,
Very
I
little
think that-
money, but nothing but time.
well, it you know, you just got to get the feel for it. And like yesterday, well, let's go. Let's see where we are today. This was the S&P. Okay, so S&P is up 0.36%. Okay, it's right below the 9 again. It looks like it came down. I put in a channel. Here's a channel since the beginning of August. You can see we're in a downtrend. Kind of had a little bit of a bump up, and now we're moving back down. You'll see that sometimes you'll come down and you'll hit, you know, the bottom of a trend line, pop back up, hit the top, and then head back down the same direction. Down here we have, you know, the MACD. Back here is probably when it would have told you to get out, which would have been right up here. Okay, that's why I like the MACD a lot. The stochastic's kind of rolling over a little bit. We're getting a little closer down here in the MACD, and then the RSI is just 42. So we continue our downtrend. We hit on the 50. We've been on, you know, on the other side of the 50 for 1, 2, 3, 4, 5, 6 days now. And that's been a strong level of resistance on the S&P. And again, now we're under the 9. And right here, this candle here is the way it stands today. Is really a candle of indecision. The market doesn't know what to do. But, you know, we're not seeing a turnaround on the MACD yet. So I'm not seeing anything happy on the S&P right now. Let's go look at the Dow Jones. Now, this one's a whole different picture because it's got a deeper slope, okay, down. And here's the 1st of August. You come down and see that's about where the MACD crossed over and hasn't been there since, hasn't been back over since. And sideways, and then we got into this channel. This channel is moving really quick towards the 200. And 200 will provide us a level of support. It's a big level of support. But if we get below it and reconfirm, then the Dow is going to be in trouble, I think, because it gets below the 200. And then, you know, a lot of times that's where, if I was in like a Dow S&P or a Dow ETF, that would be the point that I would take my money out of that ETF and go somewhere else when it hit this 200. I do that with indices. I don't really do it with individual stocks because they're more, you know, the indices have more stocks in it. They're not as volatile as an individual stock. But the Dow doesn't look good to me at all at this point. Let's go to the NASDAQ. So the NASDAQ is kind of doing the same kind of thing. It bounced up. Here we are on the 50 again. We went below the 50. We're still trying to get above. Can't do it. This looks just like the Dow right now. We got a candle of indecision. We're underneath the 9. Okay, we got a trending down channel. It's not as steep as the slope of the Dow Jones. Of course, the Dow Jones doesn't have NVIDIA in it. Kind of bouncing it up, and a lot of doesn't have all, you know, the magnificent 9 or 7 or 11 or whatever it is these days. But again, here we are. We crossed over the MACD back, you know, around beginning of August, and we haven't been back over it since. We're still below it. Okay. So, you know, we're still in a downward trend sense in the NASDAQ also. We went over NVIDIA. So yesterday I was talking, you know, about in the Discord we added Microsoft and Rambus and Take-Two into the watch list, but I said, you know, because of the FOMO, you know, wait and see if you get a better, you know, entry point. So let's look at Microsoft. So here was yesterday when we put it in. You can see it just barely crossed the MACD. We were still up above the stochastic, and we're right about 50 on the RSI. But what happened yesterday, we came down and we closed just barely under the support level at the 9. But you can see the 9's kind of held it a little bit. Here's actually where I had a buy limit order. And the reason I put it down here is because I see this line where these 3 days just kind of, it was support, resistance, support. And I'm like, I'm going to put it right there. And it never did trigger. And I'm glad it didn't. Today, again, another candle of indecision sitting right at the 9. So, do you want to get into Microsoft? Well, I go down here. The MACD is up above the signal line, by 0.2. We got a stochastic that's crossing back over in a negative way, and an RSI at 43. So, we're in a sideways pattern. I'm going to wait on Microsoft. We got a resistance, right up on top. We got a narrowing band of the Bollingers, which means sideways, there's no volatility. So that's why we didn't get into the Microsoft. Same with Take Two. Take Two, you can see the reason I would have put this buy limit order yesterday here is because here we're seeing the bounce right off this line. And I said, well, if it bounces, it's probably going to bounce there or go through. And you see it came all the way down, but didn't quite get to it. Again, we're seeing a narrowing of the Bollinger Bands. We're seeing the 50-day providing a solid resistance on the top, and it's starting to break through a little bit on the 9s. Come down here. The MACD is basically flat. We're rolling over a little on stochastic, and we went, from above the 50 to below the 50 by, 7 points on the RSI. I'm staying clear of this too. The last one was Rambus, and this was off the bus 13. And this was a day we were looking at it. You can see it's above the 9. Starting to see a nice slope above on the MACD. So yesterday, this is where it's opened up and it came down, and Rambus didn't hit my level either. In fact, I just canceled this or there was too much stuff going on. But look at the Bollinger Bands are rolling in on this. We're just going to kind of move sideways. Even the MACD is kind of flattened out. You can see a little bit on the histogram. Is this enough risk reward for me? Not for me. Some people may say, okay, well, I'm going to take a chance. It's going to bounce off the 9 and go back up, maybe range bound between the 50 and the 9. That's for other people with higher risk tolerance than me. So that's kind of what we looked at. The other one that we're still in, which I'm just playing with now, because it's an oil stock. Oil stocks are hard. And that's Murphy Oil. And this is where we put it on the list at 45.36. It's sitting about 44.85. So it's been cruising right along. This resistance line came down this week. Just been cruising along the line. Yesterday, we kind of had this inverted hammer, which is supposedly, if you're into candlesticks, reading candlesticks, which is not my forte, supposed to be a bullish signal, which actually today it was because it's up. Okay. So, I may get out of this and take a little bit of a loss. I'm getting a little bit of gain, or I may just let it run. But, I'm worried about this resistance line here. It's just hard to get past that. But I'd like to get back up above basically the cost basis, but we'll see. You see the MACD sliding down, the stochastic sliding down. The only thing I got going for me is the RSI. I'm not into it very much. On the paper trade, I think we're down $75 on this. We're up 600 some for the month, which I'm happy to have for this month. But I'll just let this one ride and play with it a little bit. I'm not going to let it get past this 20 though. I'll tell you that. Where are we? Oh, 15 minutes. So anyway, that's kind of what I've had. Now I have a bunch of stocks. When the markets go down like this, it gives us a lot of opportunity to go, and I do a lot of research into where is the value coming from? When are these guys going to hit bottom, and when are they going to come back? And so I do have what I call as a dumpster fire list, and it's huge right now. And I'll show you what I mean by it. And these are not stocks I'm trading yet, or even these are the stocks that will eventually get to the end of the 200-day list, or they'll get to the horizon list, and eventually maybe on the watch list. The stocks like, let me zoom in on this. You guys can see it. So here's, can you guys see this? American Waterworks. You can say dumpster fire, dumpster fire, dumpster fire, dumpster fire, try to get over the 9. Dumpster fire starting to come back, got one over the 9, but still tailed under. Next day, yesterday, went all the way up, wicked at the 20, came back down. Today, we'll see. It's not going to have a full candle close above the 9, but we are seeing the Bollinger Band starting to roll up a little bit, and we're seeing potentially across on the MACD. It's not there yet. We got a slow stochastic moving up, and the RSI is still below 50, but this is where we want to see. I'm looking if we can get this to swing up. Here's where we have resistance today. We got the 50 up here, of course, the 200. So this could eventually be on the under 200 list, you know, and we got the possibility to get at least up to the 50 for major resistance. There's some sell orders here. Again, these are the kind of things I look for over the weekend, and I have literally 100 of these things waiting. Here's another one. This one's not even quite there yet, but you can see Unity Software dumpster fire came down. It's actually finding resistance at the 200. Look at this. Okay, now we just need it as these two converge, the 9 and the 200. Something's got to break here. I'm looking down. Looks like it's going to break to the upside just because of the MACD. We're not crossed yet. Okay, we have a horrible RSI. This is just something to watch. And the other thing that would bother me is this resistance line at this point. I would modify it out, see if it moves out a little, which it does a little bit. So, you know, again, something I'd be watching, not investing in. But these are the things I go out and look at every week. These are the ones we eventually put on list. And when you have this, so many stocks doing this, at some point, we're going to be on the other side where we're going to be busy looking at them going the other direction. At some point, I don't know when these things turn around. Okay, we did a little bit on some of the bus 13 this week. I put it in the stock, you know, ask stock list or off of bus 13. People had some questions, you know, and again, this is swing trading. This isn't investing. So here was SMCI Super Micro. I know a lot of people had Super Micro. Of course, here was earnings, and I always like to get out before earnings and look what happened at earnings. And then we got below the 50. Tried to make it past the 50, couldn't make it past the 50. Okay, now we're having trouble. We might lose the 9 here also. But we got right here, you can see right at earnings, this was the last time we were above the MACD. We're seeing a little bit more strength, but not yet. So this stock on the swing trade is not ready to do anything as of yet. Again, if you go back, you got to look at the bigger picture. I mean, if you got in up here, you're a little underwater at this point. You got to be hoping it's coming back. This is your opportunity cost lost. Again, we would have gotten out on a swing trade at this point, and we still probably would not have been. No, we would not have been back because the MACD isn't even close to being back yet. So we would have saved this much of an issue at this point. Swing trading. Now, again, this isn't investing, long-term investing. This is just swing trading. Let's look at a few more. Okay. Marvel. This is on the bus 13. So here's Marvel. Cruising along. Of course, we're above the 200. Right here, we crossed the MACD, and then we went sideways, and we never got back above it. So you might have gotten out at that point. You can see here, we're still below the MACD, even though we're above the 9. We wouldn't have got back in again. Swing trading comes all the way down. Still didn't get across the MACD. Had we got back in, we wouldn't have because the next day's earnings. You can see what happened after earnings for Marvell. So again, we're still, as a swing trader, wouldn't be in here. We got a descending MACD. We got a stochastic down. We got a diving RSI. So from a swing trading point of view, we wouldn't be in Marvel at this point. But, you know, if you have money in there and you use this, this would be opportunity cost where your money would be in a treasury bill earning 5.5%, as opposed to going from, you know, 65, 63 to 5308, which nobody wants to see ever in their account. All right, what else we got? Just picking them randomly. EXTR is another one. Nope, something happened yesterday on EXTR. See, XTR had a nice run up. Here on earnings, they actually went up, which will happen. They don't always go down. But at some point here, we crossed back below the 9. You can see right here, we crossed at the MACD. Had you got in back here, you might have lost a little, but you would have been out. Okay. And you'd still be out and you wouldn't be back in here. You look at the huge MACD going down. Look at the RSI is just tanked and stochastics tanked. So this one, again, we'd be out. We would be waiting to see if it would come back into some of our rules and our guidelines. And let's see what else we got. I don't even know what this is. PSTG. PSTG looks about the same. Hasn't been over the MACD in a while. Right here. So right here is probably about the time we would have got out with the candle under the 9. Let me go back a little further. Oh yeah, see, that would have been a nice run up. Probably would have got in right here as it crossed over the 200, unless you want to trade under the 200, which we do, and we do have a list for it. And so that would have got you in under the 200, would have got you in at 24.82, and you would have popped out at 33.78, and you wouldn't probably gotten back into this one as of yet. So if you would kind of continue to be in this stock, you would have put that into a treasury bill, keep your money safe until you feel better and the charts tell you to get back in. So that's kind of a run around the country for me. I mean, it can be exhausting or it can be fun looking at these things. When you look at 2,500 a week, you start to see blurs and you start to see patterns too, though. But I see a lot more of the downtrending, almost hitting bottom and trying to curve back up. And we'll see how that goes. But that's why we've kind of been out the last couple of weeks and we haven't been doing much. And in swing trading, that's the whole idea. Put my money over in a treasury. I'll let it sit there until the market tells me it's time to get back in. But that's how I do it. And I hope it's helping you guys, just if not swing trading, but just kind of getting an idea of what you're up against, with the institutional guys and other people who use fundamentals and or swing trading and technical analysis, or both. So hopefully this is helpful for you. And I talked for almost an hour, so my voice isn't that loud. What do you guys want to talk about?
Hey, Mark, I got to jump off.
Okay.
So I'll talk to y'all later. Rest of you have a good weekend.
Thanks,
Yeah,
Trent.
you too. Thanks for being here, Trent.
See you later.
Absolutely.
Mark,
Yep.
excuse me, Mark.
Yeah.
I'm new to Platinum this week. Do you send an alert when you start a swing trade?
No, I send out every morning under stock watch list. It'll show you the stocks we're watching. Now, it doesn't mean buy it. Okay.
Okay.
Drew, Drew, can you pull that up? Drew, are you there?
Yep, the watch list or the
Yeah, just the Discord watch list and what we
yeah.
have.
I'm just share my screen.
Like somehow mine is hidden behind some of my windows. I can't find it right now.
Can you guys see my screen?
Yeah, it's coming up now.
Is it up?
There you go. So
Yeah,
over
so-
here, go ahead, Drew.
Yeah, so if you guys come into the Discord here on the side, the ones with the diamond is all the platinum channels that you can see, or the platinum channels that Mark is sharing with members. So under here it says stock watch list. So if you click this is where Mark updates every day on the stocks that he's keeping an eye on, and you have the graphs. If you click it, you can see the graphs, the charts. And then here you can see the details on each stock that Mark has put some description or listed or put some explanations in Discord. So it's this category here that says stock watch list. And here is the trading alert. So this is where Mark sends out its sell alerts. And this will all be sent out via email to the members as well, so you won't miss it. It'll go through the emails when it's uploaded.
You got to remember on these alerts, these are when the charts, or I would say get out, but they might not be real time because I don't sit here and watch it. I may come back for lunch and I say, oh, okay, it hit my alert. And then I'll send out an alert and just say, basically, let's just say this right here on a CrowdStrike, price action swung down and hit the sell limit at 160. Price action would be quite volatile during the first 30 minutes of trading. So we'll go through why it got out. And then it's really an educational thing. So you can look at it and look at the chart, say, okay, I see why that was. It'll tell you the gain or the loss. We have losses too, on what share position, basically. So this comes out. It might not be real time because, again, swing trading isn't sitting there day trading and watching it, and I'm not going to watch it. But in the morning, I'll say, here's support and here's resistance. I usually trade off support and resistance. And so if I come back and in a limit order, a buy or sell limit order hits, or a sell basically, then when I get on it, I'll just come in here and I'll put it on this Discord. I let Drew know, and Drew sends it out on an email too.
Okay. All right. Well, thank you very much.
But what I want you to do is kind of learn this yourself, and then put your own, use your own buy and sell limits based on support and resistance, or on a particular indicator. Maybe it's the MACD you like to trade off of, and start, with paper trades, start practicing on your own, because you know what it is. As you practice more, let's say you're in baseball, and you get up and you see a pitcher that you've seen 20 times before, you kind of get to know what kind of pitches he's going to pitch, as opposed to your first time of seeing it. And that's the way this is, is the more you do it, the more you look at it, like, I've seen this before, this pattern, or this is what happened. I'm going to get out because I feel like this isn't right. That's kind of what I did with Microsoft and Take Two yesterday. I'm like, I don't like the setup. The charts are telling me it could be that way. And that's why I put the buy limits in so low, and it worked out. Now I could have put them in right at the 9, and I'd be in Microsoft right now. We'd probably be even, but I don't like holding things over the weekend. Swing trading, I will if I'm up, but these markets are just take, the stocks we've just been looking at. They're going sideways. They're looking for a direction, and that's not the way I want to trade. I don't want to be looking for direction. I want my direction to go up. So again, that's why I will sit out on my hands with money in a treasury bill.
Say, Mark, what do you think about Exxon setting up for maybe a swing trade here?
Let's take a look.
And Valero.
Now these, I like energy, but energy is so volatile, as you probably know.
Yeah, I've been watching it for a while, and I can tell I'm setting myself up to taking a wild ass guess.
Yeah, because look at the volatility, and just look at the size of these candles, these daily candles, and it follows crude, and crude doesn't know where to go right now, and that we're in Murphy oil, which is just not as volatile here as Exxon, because Exxon's gone from anywhere to, God, here we're at the low of 107.15, okay, and that was Wednesday, and on Monday we were we were at 110. Okay, so it can swing a lot. You're under the 200. I don't like that. Got sells right here above the 200. Now we're under the 9. The MACD crossed right in this area, so that's 4 days ago. So you're under the MACD. That's not positive. We're under the stochastic. That's not positive. We have a little bit of an RSI. This doesn't excite me right now. And
yeah,
I mean, what do you see that you like in this?
Well, I don't use Fidelity, and I'm using Trading View, and on my daily chart, I'm showing that the current price is right at the 200-day, and but the MACD is a little below. the trade line, and the RSI is at 52 something, and the stochastic it hasn't turned positive yet, but it can. I wonder why.
Is you're saying it's above the 200?
Yeah, I'm looking at.
I bet. Are you looking at a weekly chart? Because here's a weekly chart, and it's above on the weekly chart. Here's a 200.
No, I'm looking at a daily chart on Exxon Mobil, saying it's 107.94 as we speak, and it's right, and the 200-day moving average I have is 107.30.
Mine's 109.40. Where's your 9-day at?
My 9-day is at 107.92.
Okay, that's same as mine. So is this an SMA or an EMA on your 200?
No, it's a standard MA on the 200. My 9-day is an MA. My 20-day is EMA, exponential.
Well,
Yeah,
I don't know why that is.
I think everybody
They should be the
computes
same.
the moving average is the same, I think.
They should be, unless let me put in a let me put in a 200 EMA. Oops, hold on. Let's do EMA 20, EMA 20. All right, here's an EMA. I'm going to modify it. I'm going to make it hot pink. I'm going to make it thick. And see where that goes. Oh, so there's the 200 EMA that's above the EMA. So maybe you have an EMA instead of the SMA. This is the SMA. This is the EMA. You know what I'm talking about? Robert, are you there? Is this Robert that we're talking to?
Well, I'm Robert. I'm here, but I didn't have this question.
Okay. I don't know. Did he go away? Did we lose him, Drew?
I'm trying to find the. Let's see.
I'm thinking he had an EMA because look at where the EMA is right here.
Mhm.
Now the EMA will take 200 days, but as you get closer, these last days are weighted heavier on an EMA than here. These are all weighted equally these days on the SMA. So I'm almost assured that he's probably has an EMA on his 200 as opposed to a simple moving average. This is exponential. This is simple.
Mm-hmm.
Okay. Did we lose him, Drew? Looks like it.
Okay.
Yeah, I think so.
Okay. Anything else, guys?
Nothing for me. I've learned a lot in the last 6 weeks, but I know nothing compared to what you guys know.
No,
Yeah.
the reason we have these Zooms is for, everyone's equal. And ask questions. I'm not always right. I'm certainly not always right. You can tell, by our watch list, we don't always get them right. And we have some losses, but if you follow rules, and they don't have to be my rules, learn how to do this, learn the things you like and make sense to you and make them your rules and test them, back test them through paper trading and see how they work. And, when I came up with my rules, it came from years of watching other people do it and what they did. And some people will have every single oscillator and line up. And I wanted to limit it to as few as I could because I'm a simple mind. But the ones that seemed to make a difference to me, and that's where I got basically, my my 4 moving averages and my 3 oscillators basically tell me, with some volume and the Bollinger Band, where I want to go. Some people use a lot more than that, and that's fine. It's based on you. It's based on your risk tolerance too. But you can always get on the Discord, under show stocks, or I think that's what I put some stuff on. Ask some questions, and when I get back to it, I'll try to answer them as much as possible. If you can say, can you look at this chart? We'll look at it as soon as I get back and tell you what I think, like we just did with ExxonMobil. If you have a trouble with some of your indicators, let me know. We'll see what we can do. But that's what we want to do in this particular service is, be an aid to help you guys get better. And not only that, use this Zoom call for people to talk and ask questions back and forth and tell us. Maybe you say, man, I got this great stock, and let us know. I can't find them all. It's just impossible. But we've had several times where people get on and say, yeah, look at this. I'm like, oh wow, that's a good catch, and so it benefits everybody.
Hey, does Fidelity have paper trading?
I don't know.
Because I opened an Ameritrade, TD Ameritrade, because they had paper trading.
Yeah, I don't know. I'll have to check on that. I can't check right now, but I'll check on that.
No, it's okay. I can try looking again.
I bet
But everything
it
is
does.
different. I mean, their charts are different. The setup, all the buttons are different.
Yeah, I mean, if you plug in, what we plug in, all the charts should look alike. If you're using the same SMAs and EMAs. And I think the last gentleman, I think he had a 200 EMA is what the issue was.
He probably did. So
yeah.
But all right, well, that's all I got.
Okay.
Thank you again.
Yeah, no problem. I was hoping Bob was flying his F-16 up here so I could watch him fly this weekend, but it doesn't sound like he did.
Yeah, I've got a little appetite for some counseling from flying at an air show.
Have you flown an air show before, Bob?
Yes, in Houston, we had a annual air show that was associated with the commemorative Air Force, and we used to fly during that. And I got a ride one time with the commemorative Air Force T6 Tora group. That was interesting.
Oh, I bet it was.
Yeah, we had a 16 ship of T6 aircraft, and I asked the guy, I said, when did you check out the T6? He said, this was back in the 90s. He said, 1939.
Whoa. Bet that was different than the F-16.
Yeah, it was a prop, had a big radial and all that. So we were flying F-4s then.
We had F-4s up here at the base too. They were for recon at the time.
Yeah, but air shows are a good place to screw up in front of a lot of people. So
let's hope that don't happen. They're out practicing right now. I can hear them all out there. So anyway, that's all I got, guys. We'll see what happens to the market. Have a good weekend. And we'll see you next week. If you have any questions, then get on the Discord and just write them down, and either Drew or I'll get to it, pretty quick.
All righty.
Thanks a lot, Mark.
Yeah, thank you guys.
Bye.
Thanks,
Bye.
Mark.
Thank you.
Thanks.